Good afternoon, investors. You are now on KleverStock with me, Madhaveshwari, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates, the Malaysian stock market showed signs of stability on Wednesday morning, even as global markets struggled with news of conflict between the US, Israel, and Iran. While the FBMK LCI dipped slightly by 3.14 points to 1,708.61, it remained more resilient than many neighboring markets, such as Japan's Nikkei, which fell over 2%. Market analysts from APAC Securities suggest that while traders are currently cautious due to uncertainty, the long-term upward trend for Malaysian stocks remain healthy. They view the current dip as a temporary correction rather than a major crash. The firm noted markets tend to fear uncertainty more than the conflict itself, and such pullbacks may offer selective entry opportunities for longer-term investors, adding that the overall market structure is still strong. Energy stocks were the standout performers of the session as concerns over global oil supplies grew. Companies like Heng Yuan Refining saw significant jumps, while others like Hibiscus Petroleum and Bumi Armada also trended upward. Despite more stocks falling than rising overall, the steady performance of the main index suggests that local investors are holding their ground. Moving on to our local currency and foreign exchange. The Malaysian ringgit saw a fractional gain against the US dollar at the start of Wednesday's trading session, though analysts warn that the local currency remains vulnerable in the intensifying geopolitical risks. Market participants are increasingly gravitating toward the greenback as a defensive asset, spurred by uncertainties surrounding global energy supply chains. As of 8 a.m., the ringgit was quoted at 3.9390 or 3.9535 against the US dollar, a slight uptick from Tuesday's closing rate of 3.9440 or 3.9495. Despite this minor recovery, the underlying sentiment remains cautious as international attention shifts towards potential disruptions in the Strait of Hormuz. Dr. Muhammad Afzal Nizam Abdul Rashid, chief economist at Bank Muamalat Malaysia Berhad, noted that the US dollar index continues its upward trajectory. He pointed out that major global players are reacting to the heightened stakes in the Middle East, with China calling for protection of transit vessels and the US administration offering assurances regarding tanker escorts to maintain the flow of their energy exports. Dr. Muhammad Afzal Nizam told Bernama the ringgit closed lower against the greenback by 0.53% to 3.9446 yesterday. In light of the risk aversion, we foresee the ringgit to continue to remain weak as traders seek refuge in the US dollar, he said. Performance against other major global currency was largely uneven. At the opening bell, the ringgit managed to gain ground against the Japanese yen, moving to 2.4964 or 2.5059. and showed a marginal improvement against the euro at 4.5736 or 4.5904. However, it weakened against the British pound, which rose to 5.2590 or 5.2783. Within the regional landscape, the ringgit struggled to find its footing against most ASEAN counterparts. It edged lower against the Philippine peso and the Thai baht, while remaining relatively stagnant against the Indonesian rupiah. A bright spot in regional trading was seen against the Singapore dollar, where the ringgit improved to 3.0841 or 3.0959 from its previous close. Now for some local economic news. Malaysians should prepare for a gradual increase in the cost of living, particularly in the food and transport sectors, as geopolitical instability in the Middle East begins to impact global logistics and energy prices. While headline inflation currently sits at a modest 1.6%, experts suggest it could drift toward 2.2% by end of the year. Mohammad Siddiq Jantan, Director of Investment Strategy at IPPFA Sendirian Berhad, explained that transport services usually feel the impact of global conflict faced due to rapid adjustments in fuel and shipping costs. Food prices typically follow shortly after as the increased cost of fertilizer, animal feed and distribution move through the supply chain. Siddiq said, "We expect inflation to drift towards 2.2% by year-end, largely reflecting mild but sustained pressures in food and transport-related services." He also noted that while oil prices under $90 per barrel keep inflation moderate, a stronger ringgit trading between 3.90 and 4.00 is essential to contain the cost of imported goods. The Malaysian government has signalled its commitment to protecting consumers. Prime Minister Dato Sri Anwar Ibrahim recently stated that the government will make every effort to maintain the RON95 petrol price at RM1.99 per litre despite the market uncertainty. However, economists warn that this subsidy becomes structurally burdensome if Brent crude climbs towards $90 or $100 per barrel for an extended period. Regarding monetary policy, Bank Negara Malaysia is expected to keep the overnight policy rate steady at 2.75%. Siddiq suggested that cutting rates prematurely during such uncertainty could weaken the ringgit and worsen inflation.